Hello, traders, and welcome to the latest episode of VT Markets Traders Brew Podcast, where we discuss the market movements that help you better navigate the financial markets. In the podcast today, we dive into an important topic that, to me, is long overdue. As someone that's new to the space, it's especially important. How should a beginner approach trading? When you first enter the markets, the information that you can get can be a little bit overwhelming, right? There are so many trading styles, so many parameters and variables which can affect your trading, and you don't really know where to start. To make matters worse, it seems like the best advice on the internet that most people can give is have discipline. So, from a person that has experienced this firsthand, it can be quite frustrating for new traders to find their roots and to get invested, literally and metaphorically, into the space. So, today we have with us Justin Khoo, a senior market analyst from VT Markets APAC. Justin has a wealth of experience in the space and has seen the markets evolve across its many phases. In this episode, we will explore the personal story of Justin's journey into trading and understand from a first person perspective what allowed him to understand the markets the way he does today. Hey, Justin, it's good to meet you. I must admit that I've also gained a lot of knowledge from talking to you prior to this. How are things?
Good, good. Hi, Devin. Thanks for having me today in your podcast. Looking forward to share all the good stuff with you all.
Awesome. Yeah, I think that's what most of our listeners are waiting for as well. I think, let's dive right into it, right? I think most people are curious about your trading experience. I just want to know, like, it's obviously something that's quite high barrier considering that, how much effort it takes to get into the space. What inspired you to start trading and how did you take your first step?
Usually I get this question, right? When my first answer, people will start laughing. Believe it or not, it's ice creams.
Ice cream. What? Okay, tell me more. Come on.
Well, I was introduced to the trading world when I was really young. Um, I stayed with my grandma because my parents were overseas. So every holidays, during the holidays, my grandma would take me to KL to see my aunt, and I'm the aunt's little helper. Um, at that time, I didn't know what I was doing, and basically from morning 9 a.m. right up to 5 p.m. I'll be playing very near to the TV. And I only know one thing is that my aunt will say, look at this particular number. If it ever comes to this value, give her a call. And I only know one thing. If I give her a call, at the end of the day, I get ice creams.
Okay. What?
That means she
Okay,
was
so
making money.
wow, so at that age you were monitoring the markets already, just that you had no clue
I
what
had
they
no
were.
clue. I knew no ice creams.
Ah, I see, I see. So, but I mean, yeah, sure. Okay, you have some idea of how you started venturing into the space. You knew I mean, only in retrospect, right? But what
Yeah.
really prompted you to take a step into that direction, right? I mean, it's one thing to monitor the markets, looking at the number. It's another to get your feet wet, right, so to speak, and really get engaged in the markets themselves. What was the what? How did you really take that first step into that direction?
Well, this particular trading thing really intrigued me. I like jigsaw puzzles, and to me, it's like a huge puzzle, and I really want to solve. And of course, if you solve these puzzles, yeah, you get paid, right?
Mm,
Straightforward. The thing is that you start off with this whole thing, you really need to know what you're doing. And I read a lot. The first steps is actually reading and reading and reading. And the very first book that I got, Market Wizards, that I think is a must read for everyone who wants to know more about trading or even investing. And yeah, another great book, Reminiscence of Stock Operator and Buffett and so on, all this stuff. I think those are the first steps. If you really want to know more about trading and investing, these are the baby steps. Go in first and see is this something that you like or not. And if it is, then yeah, take the next step.
yeah, I think at least for many people, reading and understanding trading, trying to understand and understand trading from a book, can be like learning a textbook, right? It's a bit, you can have all the theory in your hands, but sometimes you have to be in the stream itself to learn and to experience what trading is all about, right? Uh,
Yeah.
I mean, knowing that, right? Can you just in I guess in the gist, can you explain to me the basic concept of trading? I mean, imagine I'm a complete beginner, which I am. I am a complete beginner, right? So can you explain the basic concept of trading to me? What is it all about?
Well, in a nutshell, just in using the word trading, you actually what you're doing is actually you're buying and selling goods and services. But if you're talking from the context of the financial markets which we are in, we are actually referring to buying or selling financial instruments, things like stocks, bonds, commodities, currencies, cryptocurrencies even. So this is the core concept of trading, right? We are looking into buying and
Mhm.
selling. And what do we actually do is that when we say buy, that's a technical term, say going long. Okay, this is the most common strategy. Everybody understands this is buying low, buying something of when the value is low, and you sell it when the value is high, and you make the profit in between. Now,
Mm.
the other part that people sometimes the beginners find it a bit tough, that's going short. You're selling first, and then people like sell. How do you make money from selling first? So what actually happens here is that you are actually borrowing the financial asset from a party, usually from a broker, and
Mhm.
you sell it at the current price, believing that probably in a short while this asset class is going to drop in value. So when it eventually happens, you sell it to the market, you buy it back from a market from a lower value,
Mhm.
return the borrowed asset class to your broker, and that's how you make your profit. So in short, it's actually sell high, buy low, right? So
Okay.
of course, all this stuff, you have to rely on your predictions. And usually for a trader, we will base all these predictions from economic data, company performance, market trends, or technical analysis for that. So we use all kind of stuff like that. Um, and then finally, I think it's end of the day, you have to decide what kind of trader you are. You're a long-term trader. Some people call that day trading, or a short-term
Mhm.
trader. So in a nutshell, if you want me to explain the basic concept of trading, this is it. That's the nutshell.
I see. All right. So, okay, you just said that there was a lot of analysis that happens behind the scene before a trader makes the trade, right? So I'm
Yeah.
just curious, right? I was always under the impression that market movements are, I guess, in the sense, somewhat arbitrary, right? You never know. It's always predictions, right? So what you're suggesting is that there's a reason behind everything that's happening, right? And it's when it goes up and down, it's not because of some uh, active, I guess arbitrary reason, but because there are things, I guess what I was trying to say, like fundamentals that are affecting, the changes in prices.
Yes,
I
definitely.
see.
There
Wow,
are
that's
behind,
fascinating.
but of course, there are certain things known as speculation at the end of the day. So you really need to understand that's the reason why I like to combine both types of studies. That means, first of all, is the fundamentals that I just mentioned just now, early
Mm-hmm.
on, like the news, company news, and stuff like that, the economic news and stuff, and backed it up by price action. If these two gel together, then you have a higher chance.
I see. Okay, makes sense. Right. Okay, then so what are some of the most, I guess, common misconceptions that beginners might have about trading? Like, from outside peering in, for me, it's still a big jumble, right? I'm still struggling to find the ropes. So, what are the main things that we probably misunderstand and, are trying that will make more sense that coming from you?
I think if you were to, for me, I think the biggest misconception would be trading is easy from day one. I don't really think it that way, and because you always, from marketing's perspective, you see a lot of people putting on YouTube, in the newspapers in the past, and said just an hour a day, clicking buttons, and you'll be financially free. This kind of
Mhm.
stuff. I mean. Uh, to be serious, if you really want to make a business income, you really need to trading like a business. So imagine you have a business and you only spend an hour a day. I don't know how you're going to do well. It's also like imagine your first day of work. Do you know what to do? I don't think so. So
No.
it comes
Yeah,
with
definitely not.
experience over time. So I think that's the one, is that people just say it's easy, 1 hour a day and financial free.
If only things were that easy, right?
No.
Right, but I guess in a sense, there are parts which are more difficult, but there are also ways which I guess the people that are providing the service, like brokers, can sort of reduce the friction, right? To make trading easy. In a sense, obviously the decision is not easy, right? But making the trades easy is something that we can do, right? Is that something that many brokers endeavor to try to get to achieve?
Yes, of course. That comes under the education part, which to me is vital.
I
Yeah,
see.
you
So
really need that.
yeah, so we're speaking about education, right? So how important is having a solid education or background in finance, right? Specifically for your trading success? Because as a kid, my dad was always like, you got to take psychology, you got to go into finance, and I know that the reasoning is rubbish, right? The reasoning is that if you go into psychology, you can sort of like predict the markets, right? You have your powers on, the sentiment, right? And you can just trade and sort of take care of yourself without having to actually come into the workplace. Now that I'm older, it obviously is a crock of rubbish, right? But yeah, so there's this idea that you have to go to school, you have to go down, have like maybe I don't know, master's degree in finance in order to succeed in trading. So how really important is this kind of solid education and background in finance required for your success in trading?
Well, if you have a background in finance, of course, it's going to help you understand and you're going to catch up much faster. But to be frank, I didn't have that finance background. I came from an IT background. It
Mm,
is it's my determination and my interest in this particular field that I dove into it and really spent lots of time in the early days.
mm,
And yeah, it comes with experience. At the end of the day, I you know, if you like it, you'll find a way. Self-study, you definitely find a way. I believe in that. But it's important to know what you're doing at the end of the day.
yeah, it's like measured sort of progress, right? It's not just like going in, just having a few rounds, and then you sort of have like a set goals for yourself to see how you can slowly improve over time. And I think, again, right, it's what you learn in school is a lot of the times theory. So when you really
Yeah.
get into the space and start tinkering around with the different trading tools and options, that's when you really start to understand like how the market works, and because you have skin in the game, right? So you
Yeah.
really learn the lessons that you have to learn.
You actually hit it spot on, right there. Because like for me, I didn't have it easy in the early days for trading as well. I joined a lot of courses, and somehow I didn't have the experience. The teachers were really, really good, Don't get me wrong, the teachers were really good, but somehow I wasn't able to identify at this particular period when to use this strategy or that strategy. And that had no experience until I went to the real world, where I worked in the boutique fund house. That's where the real thing is. It's just like you just graduated from the uni and you have all this theory stuff, right?
Yeah,
And when you start working, that's when you see, that's how you apply things.
makes sense. Okay, right. So you've obviously gone the proper route, right? You have had like the theory, and then from there you apply the practical, right? So for us, like more, I guess, for us mortals, right, mere commoners, right? What are the first steps that a beginner like me should take to start um my trading journey? Like, what are the first things that I should look out for, and what should I do?
Well, like discussed earlier, the very, very, very first thing, educate yourself. I think that is very, very important. Start reading books. If you can't attend courses, whatever courses, you know, don't think that you know everything. Always come in and say, I don't know anything. I am a blank piece of paper. I want to learn things. Okay. Once you understand what you're doing, then the next part, this I think is very, very vital, is to understand the risk associated with trading. Because if you don't understand that, you're going to get burned really, really bad. And I had this very bad experience before.
Hmm.
Yeah. Then once you're okay with that, once you understand what you're doing, choose a proper broker, right? Open a demo account with this particular broker. All
Hmm.
right, get familiar, how to use the tools and what you're looking at, whatnot. Then after that, when you understand this, then develop a trading plan. This is very, very crucial. You need to know a plan, a strategic plan, so you know what you're doing, and then start small. Don't go big. That was one of my biggest mistakes. I went overconfident in the early days, and I went big. Well, not a good thing. So start small, keep learning and stay updated. Well, then from there, you will start to understand a journey of not only knowing trading, but a journey of understanding yourself. So you have to manage your emotions really, really well. And one of the best ways, get your family to support you, support what you're doing. And with this, I believe, you can start your baby steps towards your trading journey.
I see. Wow, it sounds very philosophical. I mean, I think it's more than just, I guess, just an activity, or there's a greater meaning behind it, like keeping your emotions in check. And which is what I said in the beginning of this podcast. I say, wherever I go, they tell you about having discipline, which makes sense, right? But they don't tell you the steps that you need to take before you can have that kind of discipline, right? It doesn't replace for you the kind of strategy that you should adopt, and that's the hard part, right? I think
Yeah.
figuring out what strategy works best for you, what kind of trading style, what kind of risk appetite you have. That really is the part that's the killer. The discipline, in retrospect, for me, I think that's the easier part. But maybe I'm just coming up from a novice. It might be easier said than done, right? Uh, I don't want to know, right? Having spoken a lot about what beginners should do, right? I want to know if you have any funny or interesting stories from your earlier days of trading. I'm sure you have it a lot because you've been trading for a really long time. Yeah.
Yeah, that's a really, really long time. I think I have a few incidents. I can bring it up, no problem. I list in the early days, when I was searching what I wanted to do, um, I think Robert Kiyosaki, right?
Yep.
Yeah,
The
he
rich man, poor, rich dad, poor dad. Is
Rich
that
Dad
is that
Poor
the book?
Dad. Yeah,
Yeah.
that's the one. That's the one. Yeah. So he said, any successful business, usually that person would have run the business to ground 3 times. Then after that, that person will be successful. He has enough knowledge. And I kind of regret listening to that because I blew my account 3 times. And the third account, just before blowing the third time, I was like celebrating, yes, I'm going to do well after this. And true enough, so I was thinking it's like a psychology kind of thing. So many people ask me, hey, Justin, you blow your account 3 times already and it's not small amounts. How do you sleep? I always joke, I say I sleep like a baby. And they say, wow, so good, so good. I said, hello, it's like waking up every 3 hours crying. That's how I slept.
Wow. I guess in the sense, because it's not really, you're still in you give yourself that slack, right? Because you're still learning, but you figured out eventually you'll be able to make back that amount many times more.
Yeah, of course, I made it back, but in the process, you will experience funny, funny things. Like trading by the beach. I think when you hear trading, it's like the lifestyle, correct?
Yeah.
Yeah, I stay in Ireland, on the island, so I've tried that. To be frank, Malaysia is not a good place to trade by the beach. So freaking hot over here.
Yeah, I can imagine. Yeah, I can imagine.
Yeah, I've tried all this funny stuff. Imagine, there was once I went to the beach with my family,
Hmm.
and I was like, oh, this is the lifestyle. Then I started taking trades, and guess what? Like, after taking a trade, there wasn't any connection to the internet.
Oh,
Oh,
wow.
yeah. Oh, wow. I had to rush back.
Wow.
Imagine my family. I'm telling my family, sorry, I have to go back right now. So,
Yeah, and this is why you hear all these stories, right? About traders. I think, I mean, let's not talk about just like forex traders, CFDs traders. We the broader spectrum of traders, like crypto traders for one. They call themselves like degen, right? That's the name they chose for themselves, and largely part of the name is because they stay at home all day and just do trading, right? And that's, I think, is likely because that there's a secure sort of connection. You can count on your trades being executed the way that you want. So do you think that in this sense, people who are traders, right, are essentially degens because they are forced by necessity to stay somewhere safe and stable so that their transaction, their trades can go through. Do you think that's the eventual outcome for all traders?
I wouldn't want to label them as degens, but that's the necessary requirements. You need to have a stable, you know, internet for you to execute your trades. You can't run from that. So I think regardless, even from last time, if you're in the office, you have to stay in the office to trade. So
Wow.
I don't know, do we want to call that degens or not, and staying at home all the
Yeah.
time?
Yeah, they use it like an affectionate term, like that. Yeah, there are lots of when you know someone super well, you give them like I guess a semi-insulting name. It's a way of affection. It's the way they affectionately talk about crypto traders.
Well,
They are degens, right? So, yeah, I wouldn't read too much into it, but yeah, I love the name. I love the name. If somebody ever called me a degen, I'll treat it like I've accomplished something in my life. Yeah. Uh, so we just talked about there's so many different kinds of instruments out there, right? Can you tell me a little bit about the key differences between like trading stocks, maybe forex, and we talked about crypto just now. Yeah, what's the key differences between trading these financial instruments? Because at least from our point of view, they look pretty much the same.
well, they are different asset classes in the first place, and they're really, really different, to be frank. And one of the key differences, of course, is the market hours, right? So when you are trading stocks, for example, the New York Stock Exchange, it's if you're in like you're from Singapore, right? That will be half of the year, 9:30 p.m. right up to 4 a.m. in the morning, and the second part of the year will be 10:30 p.m. right up to 5 a.m. in the morning. So that is a fixed time for you to trade the stocks, right? Whereas when it
Mhm.
comes to the Forex, it's 24 hours, 5 days a week. And then when it comes to
Okay.
cryptos, for example, is 24 hours, 7 days a week. Like it doesn't
Wow.
stop. Yeah, it doesn't
Wow.
stop.
There's no rest. You can't
There's no
sleep.
rest. Yeah.
Wow.
So that's market hours. Then the other part is the volatility. Stocks to me is generally moderate and vary by stocks
Mhm.
and market conditions in terms of volatility. Whereas like Forex, for example, I would consider that is highly volatile, especially when you have major news coming out. It's really you if you are just accustomed to stocks, this is going to shock you really a lot. And crypto, I would label that as extremely volatile. You have large swings. If you're not prepared for 80%, 90% drawdowns in cryptos, I think you better not step into it.
Right. But there's always like even though that there are differences, right? There's always a use. I won't say use, but I guess a purpose of for all these things, right? Like depending on your risk appetite,
Yes, sure.
and your goals. Because I've spoken to friends who exclusively trade crypto, and they say it's for them it's either go big or go home. They like the thrill. It's like it's like the rush of making the right call when things can go up or down so very quickly. So I think there in a sense there's a use and purpose for each and every instrument, and it really depends on what your risk appetite and your trading agenda is. Would you say that?
Yeah, sure, definitely. That's part of risk, high risk, high return. That's why the other areas that we need to understand also is to differentiate all of them is from the liquidity point of view, leverage, regulations, and what move them. So when you understand all this, then you know the key differences between all of them, and you
That
can
makes
plan,
sense.
what you
Yeah.
want to do.
Yep. Okay. So we won't talk about any specific strategy as of yet, right?
Yep.
We briefly
Okay.
covered it just now, right? I just want to know, like, at least, we spoke about discipline just now, right? So how can someone like me, a beginner, manage my emotions while trading, especially when there is like a lot of market volatility, especially, I don't know. Recently, I've been starting to take note of news by the Federal Reserve because whenever they say something, the market changes a little bit, right? So how can someone like me manage my emotions when trading during instances like these?
Well, before you even start, I think I've spoken before, the develop a trading plan. Do you know have a trading plan? So what's happening in front of you, is it part of your plan? If you don't understand what's happening in front of you, you have no idea. And you will, from time to time, even myself, after so many years, there are times like I really don't know what's happening. And that is the time where you shouldn't be trading. So you
Mm-hmm.
have to be realistic over here. You have to set realistic expectations, you know, when then it's much easier. So especially when the market is volatile, right? Put on your stop
Mm-hmm.
losses, take profit orders, all this, set it ready. And that in a way comes, you know what's happening. At the end of the day, everything is controlled. You're actually in control of the situation. And
Mm-hmm.
if you're one of the best ways I always test someone's emotion is this. In I noticed in the early days, when I first started trading, right?
Mm-hmm.
And I take a trade regardless, whether the trade how the risks involved, the heartbeat, that is very, very important. If you When you take a trade and you feel your heartbeat, it beats faster and you can actually hear it, and that is something that is not right for you. So it's a journey of self-understanding, understanding yourself, what's really happening in me, physically, mentally. Be very, very clear with that. So test yourself. But usually the first 3 months, you will go through all this range of emotions. But after 3 months, if you still have that, then you have to go and check what is wrong. Where is it? Well, these are small, small things. Get to know yourself. Know
Right,
the
so
type of trader you are.
I see. So after 3 months, I should get sort of like numb to it, I guess.
Yep.
Because you go really high, right? So it tests your, like, I guess, your range of emotion. So in a sense, it builds like your resistance to these emotions. I'm guessing. Is that what you're trying to suggest?
Yeah, I mean, people shouldn't be able to differentiate whether you have just won 10,000 US dollars or lost 10,000 US dollars. I mean, that's part and parcel of the game, you see. So
Mm.
sometimes you have good business, sometimes bad business, but as long you don't give up, yeah, you eventually you reach your goal. So, but that is the part you need to achieve and being like, it's normal. Next, what's
Mm-mm.
next?
I see.
That is
I see.
really,
So
really
so every
crucial.
step is like a learning journey, right? So it
Yeah.
teaches you better, I guess, risk management about what trying to achieve what you want, what sort of risks you need to take, to get what you're trying to achieve. Is that what you
Yeah.
what? Yeah, I see.
Yep.
And so how can we're talking about risk management? How can beginners apply this sort of risk management effectively on their trades?
Well, first of all, I think this part I want to spend a bit more time because risk management is a critical component for successful trading, and the it involves like strategies and planning to minimize potential losses while maximizing potential gains. So first of all, I think is to understand risk, your risk tolerance, because each trader they have a different level of comfort with risk, and this is often influenced by financial goals and investment horizons. So they really need to understand that. So apart from that, like I mentioned earlier, you need to put in on your stop loss orders because that is a way to protect your accounts, you know. And I know depending on the asset classes, sometimes you have leverage, and if you do use leverage, manage it well to limit your exposure. This is very, very crucial. And there are some traders who don't only look into one asset classes, and I do recommend that as well because you can diversify. Diversification is another way of risk management. So if there are any issues with that particular portfolio, at least you still can, carry on with your trading or investing. So
Mm,
when it comes to trading, for example, there are certain things that you really need to understand yourself. When you, for example, how much you're risking, how much you are getting back in return, i.e., your risk reward ratio, that is also crucial.
mhm.
This kind of stuff you really need to understand and manage it well. Once you understand all this, believe you me, yeah, that's when your foundation in trading is going to be really rock solid, and that then you build from that foundation to higher levels.
Okay. I do want to ask this. A lot of people, they when you're a beginner, right, they
Mhm.
sort of just jump in, right? Because it's not like when you want to start, there's a mentor assigned to you, right? I mean, I know sometimes it's helpful to have someone in the space, but they're not exactly you. What they want from trading is not going to be what you want. So it's not like you can just follow what they want to do right away, right? So I guess when you're first coming in, how do you choose what sort of asset you should trade as a beginner?
Well, I think you remember when I shared with you early on is to start reading first, right? When you from reading, you get all this experience of the different stuff that people trade, right? And from there, you can get an idea, okay, which you think is it's I feel more attuned to. And then once you understand that, the next, and I told you it's the really, really crucial thing because I see a lot of people make this mistake is that they trade asset classes that moves when they are not free or they don't have the energy to monitor for a prolonged period. So people tend to like they say, oh, because I joined a course in options and so happen, like for example, you're in Singapore
Hmm.
and this
Hmm.
particular option strategy will only see trades after the US lunch hours. And if you're trying to stay awake to trade during that period, it's not going to be fun. You may be able to do it for 3 months, but after 3 months, it's going to take a toll on your health. So
It's
that's why,
burnout, right? Yeah.
yeah, burnout. So choose the asset class which moves when you are free and when you have time to monitor this. It's really important because when you see you have time then will translate to experience, and you need that. So that is really, really crucial to me. So that's how you choose first. So first of all, look at your time, understand time. When are you free? Then choose
Mm,
that asset class.
I see.
Hope
So it sounds like common sense, but it's not so common, right? Like like you said, you've already seen people do that. Like they just follow whatever course, that they are sort of exposed to, right? But okay. What are some, in this regard, right? Obviously, when you're going into there's a lot of risk that's involved, and you want to sort of try out your strategies, right? So just now when we talked about this thing called a demo account, right? And I think that at least when you're sort of like trying to figure out the markets, when you're trying to sense out the vibe, I guess,
yeah.
how that instrument might move. It's quite essential. It's an important tool that you can use. So what are some essential tools and resources such as a demo account that every beginner trader should have?
Have a very good trading platform, but I think nowadays you have this MT4. VT markets have this MT4 that's good enough for beginner. And
Hmm.
if you want to do something much better, there are a lot of charting softwares outside there. So these are something crucial that you should have inside there for the beginners, move and touch around and see. I think that's
I see.
crucial.
Do you use the like some of these tools in your day to day on a day to day basis? Like, can you name me some of the tools that you might use?
Well, the for the charting software, I do both. I use the MT4, but when I travel, because MT4 from time to time, when you travel, for example, they don't
Mm-hmm.
have a memory of whatever you label on the chart. So for that, I use TradingView. They have a memory because it's web-based
I
charting
see.
software. I use that. And then, of course, you need to have like access to economic calendars to know what news is coming and how it's going to affect your trade. So, and of course, if you're trading and you want to do fast calculation online financial calculators, you can try like MyFX book. There's this website. They have the like Forex calculator, different types of calculator is there for you. I think these are crucial, right?
I see. Okay. Oh, that's all fine and good, right? Well, that all makes sense. So I guess if you're looking to create a demo account and to test out your trading strategies, why not try VT Markets? VT Markets comes with educational resources, client support to make your trades run smoothly, and lots of other useful things that you can use to help your trading journey. Take your first step with us today and experience for yourself how seamless execution can make the difference to your trades. Moving back to our conversation, Justin, can you explain the concept of leverage and how beginners should approach it?
Leverage, oh, that is a very, very important subject because to me, leverage is a powerful tool in trading, because it allows traders to control larger positions than their actual invested capital would normally permit. So basically, what you're doing is that you borrow money from a broker to increase potential returns on investments. However, while it can amplify gains, you can make a lot of money from it, you also increase the potential of losses. To put it in a nutshell, I call it a double-edged sword. So when you want to approach leverage, I think as a beginner, start with very low leverage. Sometimes, I don't even want to use leverage at all.
Mm.
As a beginner, I start with that, and I can't I can't say they mention enough the importance. Please have stop loss. And at the end of the day, keep learning from this. And when you really understand, leverage can be a great friend to you when you
I
understand
see.
that.
So it's like I guess you want to use leverage in a measured and sort of calculated way rather than just treat it like a
True.
tool to just get money, right? You
You
want to
got
make
it
sure that
spot
you
on.
have some degree of certainty, right, before you use this tool. And beginners, because they lack the knowledge, they lack the expertise to use that particular tool, you wouldn't recommend them to use it. Like I don't know, a chainsaw. Yeah. So you want to be more careful with something that is this that makes such a big impact. Is that what you're saying?
Yeah.
I
Trading
see. I
is a
see.
journey, you don't need to run so fast from day one itself. Pace yourself. This is, it's like golf. You can play for a long, long, long time. So
Hmm.
you're gonna make money for a long, long time. So why burn out from day one,
Yeah, it's a
understand what you're
marathon, not a
doing.
sprint.
Yeah,
That's what we're trying to say, right?
right.
I see. Okay. So obviously you have to stay updated with market news and trends, right? That's like a prerequisite of a trader. Like you said, you monitor the news. Like I'm guessing every day, right?
Yes.
How do you personally stay updated with market news and trends, and why, at least for the beginner trader, because they are only trading a limited segment of products. Why is it important to them?
But depending on the style of trade at the end of the day, because if you are going for the long term, of course, you need to be kept updated to news because news will then shape the way or the direction of an asset class. But there's another part where for the short-term traders, news, because news it shapes the movement in the longer term,
Mm.
general direction in the longer term. But there's also one part of the news that generates volatility, that takes uh, liquidity out. So that's another way to part to look into it. So you need to understand both areas. If you're short term, then know what type of news that generates volatility to take advantage of it. And if you are a longer term trader, then you take news to understand what is the general longer term direction of the market. That's how I would use news. Okay. And at the end
Mm.
of the day, keep a trading journal of what happened in the past because it could, in a way, give you an idea what could possibly happen in the future. Like, for example, at the current moment, bad news is good news. It may not sound logic to you, but it is what it is. Because with every single bad news, the US market goes up higher and higher. But this is what I call the illogical market. But In end of the day, it will turn logic where bad news will be bad news, and this comes with experience. Okay, and this cycle repeats and repeats and repeats. That's why keep a journal. You will have a better idea before the market confuses you.
Mm. I understand that you do a lot of teaching for new traders that are coming into the market, and in your capacity of like a senior analyst in VT Markets APAC, right? So you obviously interact with a lot of beginners, a lot of people who are just making their first steps into the market. What do you see are the biggest mistakes that they make, and how can they sort of avoid them?
I think I would say don't get carried away with wins. You know, that is very important because sometimes you can get lucky. Uh, Strive for consistency and understand one thing is that you know there is no one strategy to rule them all. That is really
Is that
really
a
crucial.
reference to things?
A lot of yeah, in a way it is. So be equip yourself with possibilities. Be flexible, and most important thing, stop saying I know, because you don't know sometimes what you know. So keep learning.
Mm.
When you are humble, that's where you last longer in the market.
That you give yourself the opportunity to be wrong, right? That makes you less certain and more careful about your trades. Yeah, I think that
Yeah.
that is usually quite a useful idea to have. Uh, okay, so having all the knowing all this and knowing that we should not know it all, obviously there should still be some sort of like, I guess, trading plan, right? So
Yeah.
how important is this trading plan? You hear it, you tell me about a trading journal, right? How important is having such a trading plan, and what sort of things should it include?
Well, a trading plan provides a structured and disciplined approach to making your trading decisions, managing your risks, achieving the consistency that you desire, right? So, in the plan, I think it's crucial to include very first thing, what market you are trading. That is very, very crucial. All markets which you are trading inside there. And the
Mm-hmm.
second part is, of course, you have your entry and exit rules. You write them, be very, very, very clear with them, very specific, and also include your risk tolerance, your money management. Always tell beginners, start off with some 1% or sometimes less than 1% of your total capital that you per trade that you put inside, and have a maximum of 3%. There are some who go more, I know that, but for beginners, keep it within 1 to 3% or less than
Mm-hmm.
that, depends. Okay. Now you must be equipped with strategies for different market conditions. Lay them out in your plan. If it's highly volatile market, what should you do? If this market is waiting for a news, what should you do? All these different strategy scenarios that could happen in the market. And once you're clear with that, then the next part, I think this is usually for day traders, and you have different strategies for different times of the day. That's crucial because, like Forex, right? The bigger movements usually come during the European hours, and then the second bigger movements will come during US hours. Usually, the market is pretty quiet during the Asian hours, so you
Mm-hmm.
should have strategies for different times of the day. And at the end of the day, with all this, you still need to review and adjust from time to time. So
Mm-hmm.
this, I think,
Because things
together,
always
this whole
change.
thing is a strong approach, of a trading plan, how you should look into it.
Makes sense. Okay. Yeah. Okay. So it's not something that's set in stone, but rather, sort of evolves with market expectations and also your own expectations and expertise in the space, right? You don't take something wholesale from, say, a course, right? And you write it down. Oh, these are the rules I need to abide by, and then you treat this like the Bible, right? For
Yep.
all
Yeah.
your trades, you have to change it according to how the market evolves, right? And how so you have to have a constant source of I guess input from people who are more experienced in the space than you, right? Somebody that you
Yeah,
can always depend on to sort yeah, to sort of like modify and tweak your trading strategy. Okay,
yeah.
that makes sense. Okay, and I do want to talk about this, even though it's not super duper relevant with what we've talked about so far. The specifically trading strategy and what the best practices for beginners, but the space that we are in, the trading space can be a little bit dodgy at times, right? So and there are places that don't have the best reputation, right? So what are some, I mean, we're talking broadly about I guess fraudulent behavior in the space. So what are some like red flags or signs of a, I guess, a scam that maybe beginners who are looking to participate in a new to work with a new broker should be aware of? What are the things that you should look out for?
When you talk about a broker, make
Hmm.
sure that they are registered brokers. Check whether your investment product or the person selling you whatever they're doing are with financial regulatory authorities. Like for example, in stocks, check it with the SEC, the Securities Commission in the US. And when it comes to like Forex, if they have these two particular license, I always look for it. Either the FCA, which is the regulations from the UK, or the ASIC license from Australia. This to me, these two, I call them as the tier one license. So this is
Okay.
crucial. Well, but for crypto, unfortunately, it's still we are moving there. We're moving there, but you still have to be very careful. We're still, to me, I would just call it like the Wild Wild West, the cowboy period.
I see. Yeah, it's a really 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 new market. I think it's is it less than 10 years old? I don't know. Things are still sort of getting
It's
sorted
more.
out
It's
in
more
this
than 10.
space.
It's more than 10.
It's more than 10. Wow.
Yeah.
Okay. Yeah, but at least the market expectation is that it's still a really 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 new market. Maybe in comparison to Forex, which has been around for many many many
Yeah.
years, right? I see. Okay.
Well, the second part is that if you have difficulty withdrawing funds, the broker gives you a lot of headache. Reasons, send you this small print telling you why they can't send money to you. That is another red flag to me because I've experienced that before. Believe you me, it's no fun. Uh, Especially when you made a
Yeah, I
lot of
can
money.
imagine, right? Yeah. Wow.
Yeah.
Do these things still happen in today's environment? Like, are there instances where such, I guess, scams still occur in today's more prudent trading environment?
Yeah, it's still around, unfortunately.
Wow.
That's
And
really a bad thing. Yeah. So you
there's no
have to be
so
careful.
Okay. Yeah, there's no real sort of recourse that, people that get scammed have, right? I mean, if they are, like you said, regulated and registered, then, there definitely is an avenue they can approach. But if these people, if they're not registered, they have no, they are not accountable to anybody, then wow, then, you can get really burned before you even start trading, right?
Yep. Yep. Yep.
Yeah. So I guess
Unfortunately.
I guess in that way, you have to be careful during every step of the journey, right? So you have to go with a trusted broker. You have to, make sure that you have realistic expectations for your trading, and you also have to, stay updated with all the education and all the market news. So it's not as easy as I guess media would have you believe. You just like what you said, chilling at the beach,
It's a business,
sipping a
right? Remember I
yeah,
said
sipping.
it's a business.
Yeah, you can't be out there sipping
So
pina
how you
coladas
approach your
and
business?
yeah, exactly. Right. It's all I guess discipline, right? So, we I just spoke about realistic expectations. What are realistic expectations for beginners? And how should they sort of like plan them for their own trading journey?
I think the most important thing is to define your clear objectives. Determine what you want to achieve in trading. Are you looking for long-term growth, generating extra income, or learning about financial markets? Your goals should align with your overall financial plans. So you have to evaluate your financial health, your income, your debts, your emergency savings, plan out all this, determine how much you can risk because it's going to
Mm-hmm.
affect if you risk too much, it's going to affect your financial stability. We don't want that, right? So
Yeah.
develop very realistic investment goals and then set realistic profit targets. It's always based on your experience. You may get lucky in the beginning, make big money, but we are talking about consistency, talking about long run. Okay,
Mm,
so
yeah.
based on historical performance and realistic assumptions, right? Set all this your targets. So because you need to understand the market is unpredictable, and high returns are typically accompanied by high risk. So you plan it well. So end of the day, uh, I think another crucial thing I've mentioned early on is plan for learning, not just earning. You know, learn, not just earn. And then from time to time, measure your performances. And that's, to me, is how a beginner should set, the expectations, a realistic expectation.
Makes sense. Wow. Okay. Okay. So we in our conversation so far, I think our expectations have been set. We've remained somewhat grounded through the whole conversation. We've always thought of beginners as what they can realistically achieve, and from there sort of plan out their own trading goals and plans. Right. I just want to let those beginners that are still listening to this podcast know there are fun and unconventional ways to learn about trading, right? Maybe Justin, you have so much experience here. Maybe you can share with us some fun or unconventional ways to learn more about trading. That can improve beginners' trading experience and performance.
Uh, always treated trading like a business. So I really did not look into like fun and unconventional. I'm really a serious person.
Hey,
So, but if you want to put it unconventional way of learning, then I think join a trading competition. That will be fun to me.
oh, that's
Like
actually a really good idea, right? The trading
yeah.
competition, right? Most of the ones I see, they don't actually use the live platform to trade. I mean, it's not a live platform sort of competition. It's usually on demo accounts. So there's really no risk and really just a
No,
platform
not
for
for
you.
me. When I say join a live trading competition, you go for a real money. That's real.
Wow.
That will really test you out.
Okay.
Because you need to be tested with emotions, and that's
I
when
see.
the real you will come out. So I you can do you can check out the World Cup trading competition. They are like you can choose the different asset classes that you want to compete in,
Mm-hmm.
and there are requirements, basic money that you need your startup capital first.
I see.
Because if
Wow,
you
that's
if you do too much demo, it doesn't really test your emotions at the end of the day.
yeah, because there's no skin in the game, right, so to speak.
Yeah, put it that way. Yes, it's true.
Okay.
Well,
Okay.
another way, I think it would be a fun way. Um, yeah, document your trading growth, your trading business on YouTube. Tell people what you do. Be honest. And the moment I believe that when you actually tell the whole what you're doing, you tend to treat it something that you're serious in. That's another way.
Hmm. Okay. Okay. I see. All right. I guess yeah, that does give like other options for traders to learn about trading rather than using the usual conventional route. Yeah. Wow. Okay. Thank you so much, Justin. I think that's the end of our conversation today. I think I've learned a lot personally. Again, right? You're talking to someone that is a complete beginner, right?
Yeah,
Ashamedly. But I hope
sure,
to
sure.
improve, if given enough time, right? And I really enjoyed today's conversation with you. If you enjoyed this podcast, be sure to like, subscribe, or comment in the whatever comment section you're hearing this podcast on. Uh, until then, we enjoyed your time with us today, and we hope to hear from you again.
Sure. Thanks for having me, David.
Thank you so much, Justin. All right.
Join us for the next episode of the VT Markets Traders Brew podcast, where we'll continue to explore the fascinating world of the financial markets. Whether you're a seasoned trader or just starting out, there's always something new to learn. Our podcast is available on Spotify, Apple Podcasts, Amazon Music, and iHeart. Be sure to subscribe to us on those platforms for new episodes of our Traders Brew podcast. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. Trading leveraged products such as Forex and CFDs carries a high level of risk and may not be suitable for all investors. there is a possibility of losing all your initial capital. Before trading, you should fully understand the true extent of your exposure to the risk of loss and your level of experience. Please note that past performance does not constitute a reliable indicator of future results. Future forecasts do not constitute a reliable indicator of future performance. If you do not fully understand the risks involved before deciding to trade, you should fully consider your investment objectives, level of experience, and risk tolerance. You should become aware of all the related risks and seek independent advice from a suitably licensed financial advisor.